When looking for a reputable private lender, this YouTube video provides a list of reputable private lenders for high-risk personal loans. A credit review indicates that more than half of Americans have a bad credit score. If your credit score is low, you cannot be successful when applying to banks and other lending institutions. Today, we'll discuss the top high-risk lenders and some options in this video. We'll start by showcasing the top options in each area, including bad credit personal loans. After that, we'll provide credit unions, payday loan alternatives, and lending apps to people who need to meet the requirements for personal loans. Follow the links in the description below to visit the official website of loans. What is a private lender? Outside the established banking system, a private lender is a person or business offering loans and other funding choices. This has significant weight as banks can occasionally be highly selective about the people they give money to. However, you can obtain a loan tailored to your unique circumstances by working with private lenders. How do high-risk personal loans and high-risk payday loans differ from each other? First, there is a small error in the word high-risk personal loans. Such a thing does not exist. Although we refer to personal loans for bad credit, these loans aren't precisely the same as high-risk loans. Individuals with poor credit can benefit from bad credit personal loans, but not too badly. There are minimum credit and income restrictions for personal loans for people with weak credit. People with dire financial problems and very poor credit are the target audience for high-risk loans. Consider this distinction between payday and personal loans for those with weak credit. Although we have previously defined it, let's briefly recapitulate it here. Personal loans, 5.99% to $35.99% annual percentage rate, up to $100,000. Payday loans, APR averages 400% for amounts up to $1,000. Bad credit personal loans, APR ranges from 15% to $35.99%, with a maximum of $10,000. Payday loans at high risk, the annual percentage rate, APR, might be more than 1,000%. Do high-risk loans and bad credit loans differ from one another? Most likely, yes. These two loan types are intended for borrowers with poor credit. The term, bad credit loan, most often refers to any individual with poor credit. Those with extremely poor credit are eligible for high-risk loans. Thus, loans with a high-risk profile might be categorized as bad credit loans. Leading private lenders offering high-risk personal loans. 1. Green Dollar Loans. Green Dollar Loans is not an online platform that links borrowers with poor credit with lenders. It is an excellent illustration of a non-direct, high-risk lender. This organization is fantastic because it exclusively provides personal loans to borrowers with really poor credit. This implies that their lenders must permit their APR to be at most 35.99%. Green Dollar Loans makes $100 minus $10,000 offerings. For those who wish to avoid payday loans but have extremely poor credit, Green Dollar Loans is the ideal option. 2. Money Lender Squad. This lender considers several variables, including your income, employment status, and debt-to-income ratio. With Money Lender Squad, you can apply online for a loan by filling out an application and giving details about your financial circumstances. A loan specialist reviews the application after it is submitted, giving it a risk score. This rating determines the interest rate and loan amount that you qualify for. 3. Credit Clock. Credit Clock's area of expertise is lending to those with bad credit or no credit history. It provides a variety of financial goods, including cash advances and personal loans. Credit Clock also features a certification procedure that considers unorthodox revenue streams and government subsidies. 4. Fund Finance. Fund Finance is a quick and simple loan search engines like Google for loans. Regardless of credit score, it has emerged as one of the most popular internet platforms in the USA for linking borrowers with qualified lenders. You may quickly compare loan offers from various national private lenders right here. 5. Big Buck Loans. Big Buck Loans is an online lending marketplace that links borrowers with numerous personal loan providers rather than acting as private lenders. The business provides a comparison tool to assist consumers in identifying the best loan options for their particular requirements and financial situation. To provide a choice of loan options for all sorts of borrowers, Smarter Loans partners with various lenders, including conventional banks, credit unions, and alternative lenders. 6. Super Personal Finder. Super Personal Finder focuses on short-term personal loans for borrowers who struggle to get standard bank loans because of bad credit or other financial difficulties. Because of its quick application procedure, flexible payback options, and set interest rates, a Super Personal Finder may provide the financial support you need to reach your goals. 7. Loan Raptor. Loan-2024 is a private lender that helps consumers who might have trouble getting authorized by regular lenders by offering personal loans and other credit alternatives. The organization provides various loan products, including home equity loans, secured and unsecured personal loans, and more. Do I become a high-risk loanee? Many consumers need to look for mistakes in their credit reports. Errors in the majority of credit reports can be immediately reported, resulting in instant credit score boosts. As you can see, most high-risk lenders don't run credit checks. Because of their credit scores, many people view them as high risk. These days, many lenders focus more on other criteria, such as employment and income. Conclusion: private lenders can provide faster loan processing times and often have more flexible lending standards than traditional banks. The terms and conditions of a private loan might vary greatly depending on the province, the lender, and the borrower. Private lenders typically demand higher interest rates than commercial banks. This is because companies take on more risk when they lend money to customers with stronger credit scores or histories. Generally speaking, private lenders provide an additional funding source for individuals and businesses that might not qualify for traditional bank loans. It's important to carefully check the terms and conditions of any private loan before taking one out because they may have more fees and interest than regular bank loans. Make sure to check out the links below to explore the loans websites.